Emerging markets crisis starts spreading to Indonesia. Emerging currency crisis, originating in Turkey. Argentina has begun to spread the word contagion effect to other emerging countries. The strongest countries are India and Indonesia, respectively. In the past month, Indian rupee and Indonesian rupiah fell by 4.6% and 2.9%, respectively. Most of them were countries with current account deficits. The cost of buying goods and services over the receipt. We need to rely on foreign capital for economic growth. It is less than the Turkish case of Argentina because of its better status. On the other hand, Thai Baht the regional average of 1.5% against the US dollar. Compared to Asian countries and emerging markets, Thailand has a stronger international stability, and stronger than Indonesia, as reflected in 2017 at the level of short-term external debt. Thailand accounts for 26% versus Indonesia 38%, and Thailand has a current account surplus of more than 10.8% of GDP versus Indonesia minus 1.7% of GDP. Probable impact on the capital market. We find that foreign capital flows out of emerging markets. Most emerging market indices declined in the past month. Indonesia dropped 5.9%, Thailand down 1.2%, while India jumped 0.9%. For that concern, rise of the rupiah and the Indonesian economy may slow down in the future. It will affect the trade with Thailand. Therefore, we have studied the trade and tourism information of Thailand in 2017. The proportion of exports to Indonesia is 3.7%. Goods with high export value to Indonesia, such as automotive plastic parts, electronics, machinery, components and chemicals, which account for more than 50% of total exports to Indonesia. While tourists from Indonesia account for 1.6% of the total number of foreign tourists arriving in Thailand, income represents 1% of total tourism revenue. In summary, the direct exposure to Thai trade represents 2% of GDP.